let's talk about the global economy. IMF's outlook for the global economy seems to be gloomy. What could you attribute to that? One would think that the world is out of the woods since the pandemic is over.
Well, the war is not out of the woods because the pandemic was over. Then we got into war. I mean, major players. You talk about Russia, you talk about Ukraine, what they bring to the table when it comes to the economy. And then you now have the Israeli-Palestine war also by the side. And that it may even get gloomy if what we saw happening over the weekend is anything to go by. Iranian attacking Israel also. So there's a lot that is happening in the world economy at this moment. I think there's a lot of distortion. We've not really come out from it, but then with all these other issues, seems to put more pressure on the world economy. So I'm not too surprised in what we're seeing happening in the world economy. Even the developed economy are suffering. Inflation is high. Job creation is at its lowest time. So all these were driven by the pandemic. And then after the pandemic, we thought we're dead. Then, like I said, the Russian-Ukraine crisis came in. So a lot of things happening in the world economy. So I'm not surprised with the gloomy nature of it when you're looking at below 3%. But sometimes again, you look at the high side of it, that even when they are predicting about 3% to the world economy, an economy like Nigeria and Africa might contribute the highest quota to that because they are projecting about 3.5% for the Nigerian economy and the African sub-region. So it's not just bad news all around, but it's opportunities for an emerging economy like ours because a lot of the developing economy seems to see more potential for growth in an emerging economy, especially in times like this that is fully growing.
Now, the IMF is projecting that economic activities in the U.S. and emerging markets will also drive global growth by 3%. Do you share this optimism? And if this is going to happen, what are the factors that will drive this kind of growth?
Well, I share it. Like I said, emerging economy are the toast of most investors this time around. I share that optimism also. What's going to drive growth? I think for the US economy, I think what's going to drive growth is what is already there. The consumer index perfection is going higher by the day. We've seen that job creation has relatively improved in the US based on their last data. We see that inflation is gradually coming down in a fast way in the US. So those are part of what is driving the kind of growth we see in the United States. And we see that a lot of their industries are also back on stream after the COVID-19 pandemic. Look at a lot of profitability in the US market as it stands at this moment. So a lot of things are growing in the US. For the emerging economy, like I said, it has to do a lot more with the availability of resources, especially mineral resources in this emerging economy that are waiting for exploitation. And also, you look the fintech or the technology world are looking at this emerging economic as one of the key drivers of growth going forward because of the population, then the consumer and population they have in this emerging economy also is helping global players want to come to some of these emerging economies to be able to tap from the kind of resources that are available in this economy. So for me, that's where my optimism lies. And especially again, it could also help create jobs for these emerging economies like what we are seeing in the US. And the good thing about it is that this growth is not being embarked upon by the United States alone. Even other bigger economies are looking at how they can exploit this growth. You see, China also is looking at coming into this emerging economy. You see, India also is playing a big role also. Before now, it was an emerging economy. You can see the synergy between India and other emerging economy comes in, the Brexit issue. So all these are things that fueling those type of growth that we are expecting that the IMF is talking about.
All right, so let's look at the pandemic period and even after the pandemic period. So the global output loss since 2020 is put at around $3.3 trillion, with the cost disproportionately falling on most vulnerable countries. So post-pandemic, even the developing countries seem not to have recovered from it a lot. coupled with the wars that you mentioned. Now, what are the steps do you think that some developing countries should have taken post-pandemic that they have not taken, which the wars now have compounded?
Well, you must know that those economies goes through their own challenges. They were not able to build a buffer. You take an example of a developing economy like Nigeria. Most of their economy are very fragile because they depend on external forces. Let me give example Nigeria. Like I said, once crude price goes up, our revenue goes up. When it goes down, our revenue goes down. And revenue doesn't just go down, our foreign reserve goes down. So most developing economy, what they've suffered from is FX devaluation, currency devaluation, which have also in turn, in an economy that is maybe if you are producing more, that could be an advantage to push in more cheaper product into the market. But in an economy that depend on importation of this good, like some of these developing economy, that have in that group, that have brought a lot of people to the poverty level, that have raised cost of living standard has gone up. And so those are part of the things that are really fueling the type of challenges they are seeing. But why did they have to be there post-pandemic? Because, like I said, external forces determine the growth of this economy. Sometimes it has to do with the stronger economy, the developed economy coming in there. Now, this developed economy have their own challenges. So they couldn't come in at the point the war was closed, everybody for himself. So, and again, most of the growth in this emerging developing economy also comes from their citizens that are in the developed economy. And I mean, they were able to remit funds to create stability and also in their currency market. But these people were not able to remit funds against their citizens because most of them were even out of job because of the pandemic. So it has to be because over depending on external forces has been the key demotivating factors that have not helped this developing economy grow. If the only way they need to do is to begin to look inwardly, build some of this buffer, especially on how to curtail inflation, how to grow the economy. I keep saying that the emerging economy or developing economy need to come up with their own strategy of growth, which might be different from what we see in the developed economy when they have crisis, or when you see the developed economy have crisis of inflation, they begin to cut down rate, they begin to hike rate, they begin to look at supply chain distortion. But when it comes to the developed economy, when you hike rate, then you mean cost of living has gone up, cost of funding has gone up, inflation begin to stare the people in their faces. So they need to begin to develop a homemade type of economy that will help them grow, especially in times of crisis that is less dependent on what happened in the world economy. And when you talk about the world economy, you are talking about the American economy.
All right. The IMF and other world lending agency like the World Bank could be holding a spring meeting next week in Washington. What will you expect as the finance ministers, decision makers around the world will discuss issues related to the global economy? What are some of the critical issues you feel should be put on the front burner? And then what will be the sensitivity of these issues to the performance of the global economy?
Unfortunately, for me, I don't share those optimism that IMF, G7, whatever meets has. I feel it's just a jamboree because if you look at most of their policy that have come out, that have not really helped the developing economy or thus far. Because when they meet during the spring, they tend to push out their own agenda to the developed economy, making them feel that you don't have an option, you have to do this, you have to do this. And I think when they meet this time, instead of those policy spin, they will be so concentrated and so engrossed in trying to see how they can battle out the world from the kind of crisis that we are seeing, the Russian-Ukraine crisis, now the Israeli-Palestine, and even maybe Iran's conflict. I think that would take most of their time than even looking at most economic policy. So in terms of sensitivity, I don't think they've been so sensitive. They've been trying to help the develop. The only time you see them being part of the developing economy is things when things like this happen, trying to gain their support. And like you said, during COVID, how much of their fund did they put into this economy? How much did they really want this developing economy to grow? So I'm not so much optimistic when they bribe and woo people, when they gather there all over, when they try to say whatever they have to say. I think it's always not tilted to the developed economy. They seem to think of their own interest that they will push to the developing economy. And I think that's why I keep saying that It's a developed economy. When you are going to such a meeting, you should go with the understanding that you are saying, look, we need to partner, not like you need to give us aid, because that has been the greatest challenge of the developing economy. And that's what is making the developed economy think that you cannot do anything without us, because we need to support you. So until we begin to say, look, I don't need your aid, I need the partnership. I need you to partner with us. Let it be a win-win situation rather than a win-loss situation if you decide to go. So that is when I think they could be these kind of meetings will begin to make good reasoning. But for now, I don't think it makes any good reasoning for me. It's a jamboree that has happened all over through the years and nothing has changed. And I don't think this will be an exception.
Picking up from where you left off, looking at what the Bretton Woods institutions sometimes say about developing countries, the World Bank also said recently that Africa's growth at around 3.4%, which for West Africa and that for East Africa is higher, about 5%, is not enough to take it out of poverty. And it also gave reasons why they said that, looking at the infrastructure deficit and the political instability in some regions of Africa. At a forum like that, what kind of partnership proposal do you think African leaders can offer some of these institutions? Is it just proposal for loans? What should that partnership be about?
I think that partnership should be about infrastructure. You hit the nail on the head. It should all be about infrastructure. African, especially, are lacking infrastructure for growth. And despite their teemingly high population of youth that are also making so much wave around the world, but this wave doesn't come unless they go to the countries like America, like Canada, and other developed economy where they have those infrastructure, they tend to strive there than rather when they're in their own country. So when we're looking at partnership, they should be looking at partnership in the area of infrastructure, not just funding. And then when you're talking about infrastructure partnership, we shouldn't always be thinking that, oh, the partnership should be 100% partnership. You should also begin to involve your own homegrown companies to learn from these international companies that are coming to build some of these infrastructures. So for me, that's the greatest challenge. And because this Bretton Woods institution have not really helped them, they tend to go towards China. That's why the China Import-Export Bank has been one of the greatest partners of most of the developed countries because of the funds they release. Then they also bring in their own technology, which is not so fantastic compared to what the developed economy will bring to the table. But they seems not to be ready to bring it. So you have to look for it. I think basically the partnership should be in the area of infrastructure and also security, because the whole aim of governance is for prosperity, for security of the life and properties. And once they are not able to secure this life and property, how do they have to go? So they need the support of this Brand institution to be able to secure the security of this place. You can see what is happening in Nigeria, you can see what is happening other developed economy. And then the Brand institution should tend to support the larger union, like in Africa, African Union, like in West Africa, West African sub-region, like in East Africa, the East Africa Development Region. They need to see how they can support them in strengthening democracies in these countries. And not just when this happens, they try to bring in sanction, like what we see in Nigeria. No, rather, they should come in there and strengthen democracy with institutional training, so that Africa begin to build institutions rather than building men. So that's why we keep saying that the problem with Africa is not in the mineral resources, it's in the structural framework where an African economy grow, a structural framework that have been developed right from a structural that is a structural framework that have been made to depend solely on the developed economy to give them direction. So it's all until Africa begins to say, you know what, we need you, you need us. It's not that we all need you. Then you could begin to see the kind of good and prosperity with always embassies should come to Africa.
Now, let's talk about the de-dollarization of the global economy. If you look at the BRICS nation, they are making efforts to de-dollarize the global economy to reduce the over-dependence on dollars and the influence of the United States. Now, what are the challenges? And if this succeeds by one way or the other, do you foresee any challenge as far as global economy is concerned?
Femi, I don't even see it succeed. Sorry, I don't even see it succeed. Because when you look at these BRICS nations, you ask yourself, how many business do they do within themselves? You see, I keep saying that the African Union have not been able to have a single African currency. The West African Union have not been able to have a single African currency. Forget about the Anglophone or the Francophone world that they say exists. Once there's no trade within yourself, then you are not able to come up with those strategies. Now, and if one person is having more trade than the other, then the one person that is having more trade than the other seems to be in a more disadvantage, just like the other person. So if BRICS nation really want to succeed, there must be a trade between themselves. But when you look at the big corporation, where are they? They're all located in the United States of America. And they also try to do business globally from their base in America. So the dollar still remains a means of exchange. You're looking at the BRICS nation, they've not talked about currency, they just keep talking about the fundamental of them coming together. And you ask yourself, how many of them even accept each other currency as a medium of exchange? Rather, they still accept the dollar. How many of them have their foreign reserves saved in each other means of currency? They still save in the dollar. So I'm not too optimistic when it comes to that point when people think, oh, the BRICS are going to take over, the United States is going to go down. No, I don't think so, because until you do more business within yourselves, then you begin to say, okay, fine, we do more business within ourselves. So we tend to accept each other currency, say medium of exchange, or try to create one form of currency so that business will be slimless. But as much as most of you that are doing, do more business with the United States of America, with European nations, than they do within yourself that you say you're a BRICS nation. So it's not going to see the light of it. That's my own opinion. But it could change if we start doing business within ourselves.
Take on this trend of countries backing up their gold reserves towards the de-dollarization move? Do you think, if it's not even if it's not about de-dollarization, it is also a trend that Africa should key in the absence of a common currency?
Well, how many African countries has gold? And every African country will have the resources to get more gold and then use it as a medium of exchange. If you talk about Nigeria, I would rather give them our crude oil as a medium of exchange. And we've started it already. If you look at the agreement we have with the member. So when you're talking about gold, you're talking about countries like South Africa or Angola, and those countries that also have their own challenges when it comes to this gold reserve. So I think no matter how much they are trying to build it, the only way it can work, because even when you look at the United States also, they also have gold. They could also be a spoiler. And most of their companies are the ones that manufacture this gold. They could also be a spoiler. So you need, the main thing you need is to make sure you improve your volume of trade within yourselves. That is the key driver. Once I'm buying your material, you are buying my own, the era of whereby we come back to our forefather area of trade by barter. So that's when things will begin to work. It cannot work like this when everybody seems to be independent of each other. And you seem to say in the morning that, look, we can be together in the night, then you call your enemy and say, how can we work together? So that for me is the greatest challenge. So forget whatever they say. As long as you're not doing with business within yourself, you save the gold, you want to come and Nigeria to come and buy, but Nigeria does not have gold. So what, are you going to collect crude oil for them? Are you going to collect the Naira? So there must be a synergy. There must be a meeting, technical meeting, to really look at all these things holistically. Because what you find out that most nations are greedy, most nations are thinking of protecting their own, not bringing their own out. You won't blame them. Even Nigeria seems to do that. Because when you don't have the infrastructure, then other nations that have the infrastructure, the cost of their goods that come to your market are cheaper. And when your goods are higher, they go to the other goods that are cheaper. And that means you'll be killing industrialization in your own nation. So there's a lot of things involved, not just because of the medium of exchange. Like I say, yes, that's very important, but a lot of technicality used to be involved, put into it. And like in Africa, you want to go to a country like Gambia today, can you easily take a flight from South Africa, from Zimbabwe, from Sierra Leone, even from Benin Republic to hit Gambia? It's actually almost impossible because we have not been able to build up infrastructure. Whereas in the United Kingdom, you can travel from the United Kingdom to Paris, to Monaco by road. So we need to begin to think of some of this infrastructure as the key driver of this so-called unification that most African leaders are looking forward to, not the political one, whereby you try to cajole one nation to join you. Nations will ordinarily look at what their interests are. But once your policy is able to protect every nation's interest, they will definitely want to key into what you are doing.
You emphasized on the need for nations to trade with one another. Now, let's talk about Africa. You know, talking about trading with one another, Africa is contending with a lot of barriers and challenges. Now, what are some of these barriers? A good example or reference is the issue of common currency and the issue of language. How do we overcome these barriers, and what will be the starting point if Africa is going to be represented in the global equation?
Femi, I think the first thing, I think the language is not really a barrier. Sometimes we need to create that barrier. As European Union be able to strive within themselves, they also have language barriers. So it all depends on the volume of trade. I keep saying within yourselves and how these goods find themselves into their nation and what taxes are you paying. The whole idea of having a single currency and the whole idea of an African Continental Trade Agreement was all about trade within ourselves. And in terms of those trade, then there will be tax holidays for some of these goods that will be manufactured in this country and brought into your own country. But you see that some other countries are beginning to look at it that, look, if we do this, the major economies, those with good infrastructure, even the smaller economy with good infrastructure, will benefit more than the bigger economy with no good infrastructure. The example is Nigeria. Or for the other economy that might benefit and become the superpower like what they want to be will be South Africa and also maybe the other Arab nations that are in Africa. So there's a lot of politicking, not about the angle from the front. It's all about infrastructure. It's all about cost of doing businesses. It's all about the cheapness nature of it. Because why is it that it's easier to get chocolate from the Netherlands is cheaper than getting chocolate from Kenya? And meanwhile, the raw materials that were used to manufacture the chocolate in Netherlands was gotten from, from Ghana. Why is Ghana chocolate more expensive than the chocolate that comes from Netherlands? Why? How? Why did we get the cost of production? Then their own seems to be cheaper, and because the volume of trade and the kind of visitors they attract because of their infrastructure. You look at flowers. Why is flower cheaper in European nation than in Kenya? That is an African country. If you bring the Kenyan flowers into Nigeria, it will be more expensive than you bring those flowers from other from the European countries or from the United States. Why? It has to do with cost of doing business. So why did Africa came up with this idea of so that the goods within Africa will be cheaper, because then they will not be able to pay tariff on all these goods. But unfortunately, that has not kicked up because of the challenges that I told you about. That means one country will benefit more to the detriment of the other countries. So there's a lot of work to do, and we mustn't forget the transportation issue, movement of goods, the security issues. Those are also there. Those are the major issues that need to be addressed before you begin to talk about single currency. You need to address the fundamental issues. Is how easy is it for me to get my good from Ghana to Nigeria without being harassed on the way, without coming through a lot of barriers that have to do with paying of levies, whether legitimate or illegitimate. So these are part of the challenges that the African leaders have not been able to address. And that's why you continue to have those challenges, because it's easier for trade between Africa and the other nations than between Africa and themselves, just because of this infrastructural decay and other issues that are politically undertoned, that the leaders have not been able to have the political mind or will to take the decisions.
Now, recently, a report came out indicating that food inflation in rich nations has dropped, but the reverse is the case in developing nations. Primarily, the thinking would be that for developing nations such as African countries, agriculture would probably still be what was part of the mainstay of the economy. But we find that this region still struggles with food security. Apart from the infrastructure issues, what other issues makes Africa struggle with food security?
Energy. Energy cost has gone up. And most African nations don't have consistent power. So they depend more on imported refined petroleum products that comes from the shore of these other nations. So that brings up the cost of productions. Whether you are doing agriculture, you want to take agriculture to create value chain of agriculture, you need some of energy to boost that. Again, you mustn't forget steel also in terms of machineries. These African countries do not manufacture some of these things in their countries, so they have to go outside these developed countries to get them in here. And so that will also have an effect on their price compared to the developed country where all these things are right in the coastal countries for them to be shipped to them at a lower cost. So outside infrastructure, energy comes in. Then outside energy, the production aspect. It's just like, let me give you an example. The best airline in Africa is Ethiopia Airline. But the hangar that they have in Addis Ababa is not largely controlled by them. It's a partnership team with the developed other airlines. So most of these goods are fabricated there in Ethiopia just for maintenance cost. But when you want to do a overhauling of production, you have to go to the developed countries. So those are part of the things that definitely will impact business, because business actually strive when there's profitability. So, but when your profit is not being enhanced because of challenges that have to do with macroeconomic issues and now high energy costs, you look at the developed world, those countries have been able to subsidize energy costs because they know what it means to their own individuals and purchasing power when energy costs are high. But to the developed economy, even like Nigeria, rather than seeing energy costs come down to help boost production because of the kind of market that we have, rather energy costs have gone up, and this has also mean that cost of some of these goods that they provide for themselves will have to go up. So it's about the structural issues that I talk about, not looking at our economic holistically. Two countries that really thrills me when it comes to Africa during these challenging times is Kenya and Egypt. I make them the Egypt experience where they were forced by Bretton Woods Institution to come up with policies that will devalue their currency, floating of their currency, make for free trading. They said, good, we will do that. But you have to support us. You have to give us some soft landing in terms of aid, in terms of loans, so that our currency will not be able to take battle because we will not leave our currencies to market forces. And you saw the IMF bringing a lot of funds into that economy. You look at the Kenya economy also. When they look at it, they look at the inflationary pressures. They looked at, look, we need to look for an homegrown solution to this problem. What most of the goods that the household in Kenya consume comes from outside the shore of this country, and we collect tariff from them. That has helped hike the price. So for now, let's suspend tariff in the meantime, and let's see how it will impact on the purchasing power of an average Kenyan. And that happened, and inflation has gone down, almost hitting, coming back to single digits. So you need to be innovative in things like this, not just the copy and pasting that you see these developed nations do. So basically, I think rising energy costs is a big problem that is really affecting African business outside the infrastructure, which is the main issues that they suffered from.
All right, now let's talk about the performance of the Naira. The Goldman Group has projected that the Naira is going to be one of the best performing currencies in the world. What will you attribute to the strength of the Naira being recorded in recent times, most importantly in the last 1 month?
I think, Femi, on this your program, we have criticized the central bank. We have said so much things that they are not doing, but we should give them kudos. People will say, oh, they met it at 700, but it's about 1,000. Look, when you look at where it was coming from, about 1,900, and now we are doing almost approximately 1,000, and people are still projecting it might go lower. So I think we need to commend the CBN for their effort, monetary wise and also policy wise. They've done very, very well. We must commend them. If you look at what have they done, they've seemed to boost liquidity. You know, I kept saying that the challenge has nothing to do with whether you fix rate, whether you increase interest rate. If you don't look at the fundamental issue, which has to do with liquidity, you will not have the result. And finally, they begin to look at liquidity as a challenge. They came up with policy. One of those policy was intervention. Our Naira is undervalued, so we will not allow it to continue to be undervalued. How do we intervene? Then they decide to go back to the Bureau de Change and say, you know what, we are going to monitor you, we are going to give you $10,000, we are going to exchange it at this rate, at this rate. Because they've been so starved of form, that sector drive the retail space. Remember that Nigeria is where it is today, not because of the import export autonomous foreign exchange market, was from the retail end. Because the retail end seems to want more of these effects. The man that is doing a business, he wants to do a social media advert, he need about $100. He cannot go to the autonomous FX market to get it. The man that wants to bring in trade goods from China that need $1,000 or $2,000, he will not be going to the autonomous exchange market. So they became a large concentration of Nigeria in the retail side. And these were not being met by the Bureau de Change alone without the support of the CBN. So immediately the CBN comes in there, there seems to be liquidity in that system. The demand for FX, especially dollar, came down, and so it has to come down definitely. Now that was one policy they took. Secondly, the policy of the payment of the 7 billion outstanding that we're owing the airline companies, we're owing some foreign investors. When they were verified, and you have to also give kudos to the CBN, that they, rather than rush into paying it to achieve the result, they went to forensic audits. They used a large auditing firm to see how valuable are these claims. And with that, CBN saved Nigeria about $2 billion. So you need to give them those immediately they clear up that 5 billion. There seems to be a lot of liquidity in the system. So all these are policy. They said, bank, you must bring out some of the effect that you have. The bank brought it out. It also improved liquidity. So all the CBN was doing was make sure that we improve liquidity in any way we can support, though it has come with a cost because our foreign reserve has actually gone down. But that is for the short term. The CBN now decided to use the monetary policy tools. They also attracted a lot of foreign portfolio investors in the capital market, also using our treasury bill yield. And so these investors had to come in because of the yield that they were getting, about 22%, 22 to 23%. And CBN have even brought it low to about 20% over the weekend. So you are seeing that with that, investors that are global investors that will earn like 5%, 6% in their own nations decide to come to Nigeria. And that also boosts liquidity in the system. So those are part of the monetary policy. So, and in boosting this liquidity, the main driver of inflation in Nigeria has to do with the exchange rate because of what we consume normally come from outside. So once you are boosting those liquidity, you are bringing down the exchange rate, then indirectly also you are beginning to deal with inflationary pressure because inflation also will come down at its own time. More yet people said, okay, it hasn't come down, goods are still very expensive. We didn't get here overnight, we won't get over it overnight. So definitely the man that have bought his good at 1,900 has not finished selling, that will not get it at 1,200. So those are part of the factors that the CBN has really done very, very, very well to boost liquidity. We're not forgetting they are also working on the 90 days. If you use dollar to have a Naira collateral, you have to change the dollar back to Naira. That will bring liquidity into the system. They also have the thing for me, that is the major driver that in the next 2 years, banks should recapitalize. Because the challenge with Nigeria has always been that when we have such challenges like this, we end up stabilizing for 1 year, 2 years, 3 years. And when there's an external shock, we go back to where we're going. So the CBN is looking at a long-term solution to it. Bank must recapitalize. They are not going to recapitalize with their retail ending, which most of us didn't see it very orthodox. But what they are trying to do is to know that a lot of these banks will attract foreign inflow. So they want to attract those inflow to also boost more liquidity and bring down the exchange rate. So that is why Goldman Sachs have looked at all this and said, look, with the shortest possible time, the Naira will become the best currency in the world. So we must give them kudos. From the worst currency some months ago to the best currency in the world, a record time of almost a month. I think that should go into the Guinness Book of Economic Recovery Records.
Well, that's nice. What the feat that the Naira has achieved through the policies of the CBN going to the Guinness Book of Economic Records. Oh yes, that sounds better than record for sleeping and waking up. Not even waking up, just sleeping or laughing. Well, on the other hand, let's look at some of the instruments used by the CBN to cause the Naira to appreciate in value. Before the regime of the current governor of the Central Bank of Nigeria, when the Naira falls sharply against the dollar, the CBN used to inject some forex into the system. And then we saw the new policy of the floating of the Naira. But from what we've seen now, it seems like there's a combination of different methods towards this boost. What do you say? Hello, Muktar. Can you hear me? Okay, there's a disconnection from the end of our guest, Muktar Mohammed, who is the finance expert speaking with us regarding the IMF projection for global economy and also the rebound that we've seen of the Naira against the dollar. If we establish connection with them before the end of the show, he'll be sure to share his thoughts on the question that I asked. But in the meantime, I want to congratulate Femi, who is a Nigerian and has suffered some financial shock due to the shock that the Naira received from the dollar. But I know that he's optimistic that in some time, which is very close, he would regain from that as the prices of goods and services that rose as a result of the fall of the Naira might begin to crash. Oh, Muktar is back with us. So let me get to hear from Muktar before Femi, who's smiling already, talks to me about that. Good to know that you're still with us, Muktar. So I was asking, before the regime of the current CBN governor, Olayemi Kadusu, when the Naira falls sharply against the dollar, the CBN injects forex into the economy to boost the value of the Naira. And then we saw the policy of the floating of the Naira. Now we've seen that the Naira has regained against the dollar, appreciated by about 12%. It looks like a combination of methods used here. What would you say to that?
Listen, initially it was trial and error. You saw people started calling the CBN Circular Bank of Nigeria because one circular will come today, the next day before you wake up, another circular came in. So we felt that it was all trial and error. And sometimes when you get to a position where you've not been before, you try to try a lot of policies because CBN was just using policies. And I need to sound in some warning here because what is stabilizing the Naira at the moment is policies. Policies could stabilize it in the short term, but what really gives the Naira more stability has to be monetary policies. So then in the short term, yes, you come in with policy that stabilize the Naira, but you need to put the monetary policies. And monetary policies have to do with price stability, exchange rate stability. And also then the physical side will also have to come into stream and see how you can begin to help. Now you see that the monetary policy, the CBN is giving FX to bureau de change for 1,100. When you see the physical side are giving importation of goods into this country through the Nigerian Port Authority, and they are charging them about 1,200. So what do you think you are gaining in bringing down the FX rate? You are losing in terms of this importation of some of these goods that the household of Nigeria needs. So they need to also be a synergy. There needs to also be a stability, and that's what the monetary side has been doing. For the physical side, they also need to come on stream and let them see the enhancement. Physical side will come up with policy that will attract more investment into the country, infrastructural development, and all that. So, in as much as we're excited about it, we should know that the current stability that we are enjoying is largely driven by policies. The only monetary side that is there that is helping is attracting foreign investors into the economy. And that is coming at a cost because you are attracting foreign investors into the economy, they are having high yield, but the cost of doing business in your country for your indigenous countries because of the hiking rate is going up. So there must be a balance at this point. And that balance, once that balance comes, your own indigenous country through your foreign policy and your physical policies are able to export their goods outside the shore of this country, then you are earning more effects into the economy, then you are stabilizing it. You are not just earning hot money because what is sustaining the Naira at the moment is hot money. And when it comes to hot money, like I always say, once there's an external shock, hot money seems to run back to their location. So, and also kudos to Nigeria, the diaspora also that are beginning to bring in remittance into the country due to the CBN monetary policy. So you could see that monetary policy seems to be working. But again, physical side needs to come in, and monetary side need to come up with clear-cut policy that will grow business in Nigeria also, that will make cost of funding be low so that we don't depend solely on this inflow alone. But we also have this foreign inflow, an inflow that we have control over, that inflow that is coming from Nigerian company exporting our own goods to earn effect. We've seen that in Dangote refinery. very soon they'll be exporting refined petroleum products out of this country. So they'll be earning effects into this country. Hopefully, NNPC will do that also because they also are a limited liability company that are coming very soon to be listed in the Nigerian Stock Exchange. And so they will tend to expand their business also. So it looks very exciting for the Nigerian economy. But hopefully, we are able to put those dots, put those lines together. Then we could begin to see that finally the giant of Africa is no more sleeping.
Interesting. The only way an average Nigeria understands that the economy is performing better or the Naira is performing better if you feel that when it comes to the prices of goods and services. So may I put this to you, how soon will that impact the prices of goods and services, the kind of stability we've had now? Then what should be the role of Nigerians in this? We've been talking about the role of the government or the CBN. What should be the role of the citizens to ensure that Naira is also performing better?
Femi, I like the way you put it. You put it to me, so I just have to defend myself when you put it to me. Yes, I think let me first of all start why we other Nigerians have not seen the price of goods comes down. Like I said, some of these people brought in these goods at a very high rate. They've not been able to sell some of their goods. Remember, you shouldn't forget that the earning capability of the average Nigerian is down. So the man that used to buy 2 cans of milk is buying 1 can. So there's still 1 can there because of the cost. So until these things are out of stocks, then you begin to import new products. Then you begin to see cost of these goods comes down. But unfortunately, on the side of Nigerians, I think patriotism need to play and realize that we must have each other back because some of the goods that will be coming in at a cheaper exchange rate, we still want to capitalize on profiting and to too much high profit. Because if let me give you an example, if I bring in my goods at 1,200 and you have brought up your good at 1,900, and I'm now selling that same good at 1,000 cheaper, you'll be forced also to bring down your own goods because because you gained before now, but now you have to suffer some of those losses and then take your gain and move. So, but the capitalism strive also on regulation. Unfortunately, we don't have a very strong regulatory system in Nigeria, that the consumer price regulatory system, that the consumer protection agency, to begin to say, look, we want to protect Nigerian consumers. So for me, that is the major challenge now, because ordinarily capitalism will want to maximize profits. That is the whole idea of capitalism. So, but when you have a regulator that is always saying, look, you cannot go further than this because this is what is, so this is the balance that you can go. So that will help bring down. So in as much as it depends on Nigeria, the regulatory authority also have to up their game and say, look, exchange has come down. But again, import duty comes down because the man will tell you that you say exchange rate has come down. What I gain in exchange rate in one hand, I lose in import duties that I pay for bringing in this consignment. So that's why I'm thinking that the physical side too should begin to think of taking a bite over their revenue. I told you what happened in Kenya. So we need to also look at it to see the effect of some of the policy of the CBN. The physical side need to do something too.
Thank you very much, Muktar Mohammed, CEO of Finance with Muktar, for being on Early Exchange today.
Thank you for having me. Thank you.
Early Exchange, shaping policy, advancing development.